Hi, my name is Louis-Pierre Gignac, President and CEO of GMIN Ventures, and we're very busy building the Tocantinzinho mine in Brazil.
Louis-Pierre, thank you very much for the introduction. Good to be talking to you. I'm really excited about this. There's lots I want to know about the company, but expand on that if you will. You're building the TZ mine, the Tocantinzinho mine. I can see why you've abbreviated it to TZ. When did you start and where have you got to?
Yeah, so essentially we made an official construction decision in September last year. So we've been building since, and at this stage we're about 25% complete in terms of construction. We've done over 1.2 million man hours on the project already. So it gives you a bit of scale in terms of this project. And, it is going to be the third largest primary gold mine in Brazil when we're done. So it is a large scale project.
It's proven to be a very difficult time to get things built and costed and financed because there have been so many kind of moving goalposts. The datum line has been shifting around. How did you fix your capex for your estimates, and how are you managing that process of trying to stick to the estimates that you had made?
Yeah. Well, look, like you say, it's always a tricky thing where you come out with a study that has a certain estimate, and by the time you get it financed to make a decision, there's sometimes a long lag that happens. So we've been very successful in keeping momentum in our progression with the project. So we had a very fresh estimate to start with when we made that construction decision. So we're not trying to play catch up with our estimate, and so far we're tracking really well against the feasibility study budget that we published. And as we speak, we're essentially 172 million spent on the project with 280 million committed out of a feasibility study budget of call it 460. So we're well under control in terms of all the major capital expenditures that we needed to do. And I'd say we're actually seeing inflation come down on many things. So we're not very concerned with our capex budget at the moment. And it really boils down to execution and completing the project on time at this point.
I was going to ask, which are the areas where you see is there still inflation? Is it in labour prices? It's and given the strong inflation of the past 2 years, that maybe there's a chance for some deflation. Are there some areas where you'll see? I mean, you mentioned it. Perhaps you could be a little bit more specific.
Yeah, I mean, when we did our feasibility study budget, that was before the war broke out. So I mean, we were seeing pretty low fuel prices when we did our feasibility study, and those have gone up since then. So we've seen inflation on energy, fuel in particular. But when it comes to steel, cement, and other consumables, we've seen those generally come down. So, for example, most of the major processing equipment and mining equipment that we purchased have come on really within budget. And it's really more a question of lead times and making sure things show up on time as expected. So for our project, and it is typical of most projects, the grinding circuit is really our critical path. So those pieces of equipment, several of them are coming out of China for the grinding circuit. So that's something we're tracking very closely to make sure, things come out of factory as planned, and we get the logistics right and get it to site. So that's going well. On our construction side, we're pouring concrete for the construction for the grinding circuit. So we'll be ready to start installing those equipment when they arrive. So that's really what we're tracking to make sure we finish the project on time and as planned.
I had the privilege of working in Brazil a while back, and one of the things that really struck me was the ability of Brazil to kind of almost feel like a country in itself, or kind of a world in itself, because it's such a huge country, and Portuguese is spoken so little outside of Brazil. I almost feel that there were industries, there were huge companies within Brazil that I hadn't even heard of, to be these giant companies. What was the decision to kind of get stuff out of China rather than or to source within Brazil, to look at kind of purchasing within Brazil? Was that an option that you studied?
Oh yeah, and like when I mentioned China, to be honest, there's very few things that we're buying outside of Brazil. I'd say almost 70% of what we're procuring for the project is from Brazil, including a lot of processing equipment. But when you're purchasing grinding circuits from Metso Udutech, who does have manufacturing bases in just outside Sao Paulo, there's several components that are in country, but others that are manufactured outside. But to your point, we're quite amazed with the availability of just about anything we want in Brazil. And that facilitates logistics. It's just a question of trucking it to site. This project has often been referred to as being remote and difficult to access. And yes, I think for many years, going back 15 years, it was. Nowadays, it's a paved highway and an upgraded road that we, upgraded where we, in the first quarter of this year, we had 1,000 truckloads of goods and supplies getting into site. So it is a site that's easy to get to, and anything manufactured in Brazil just gets to site by road. And but it can take 2 weeks because it's such a large country, right?
It's funny you mentioned 15 years ago, because actually I was working in Brazil 15 years ago, 2008, 2009, or was it 2009, 2010? Anyway, around that time, when I was there, it really felt as if the infrastructure was much, much better than it had been before. I was working with geologists who had been exploring in the 70s and 80s, and we were going to places and they couldn't believe that the roads and the infrastructure had reached as far as it was. But anyway, it's obvious that has continued. Operating in Brazil, it's always difficult operating in a new country. I mean, how do you plan to get stuff done on time? I mean, what are your things that you watch like a hawk to make sure that you stick to your timelines?
Well, I mean, one thing for sure is, and for any project, you want to make sure you can hire all the people that you actually need and have the qualifications required to do the work properly. And, when we look at our experience so far, we started with actually 30 people in Brazil when we bought the project. And now, since we're in full construction mode, we're actually up to 1,700 people on the project, which is a mix of employees and contractors. So I think what that shows is that we have the ability to find the people we need to get the work done. That's a very important part. So we're quite happy with that. We're happy with the team that we're building. And, I'd say with the approach that we have to building, which is actually a self-perform model, we're very much responsible for the actual construction workers, and we have the ability to keep the best ones and the most competent ones after for the operation. So I think we have a leg up on getting ready for operations, and we're building that team as we speak. And the mine is running now already on night shift at the moment, so we're continuing to wrap up the mining team, and we're getting additional equipment commissioned. So all that is going quite well. That is really the objective.
How many people have you brought from your previous build?
It's funny that you say that. I mean, I'd say on previous projects we had a lot more expats from Canada and other places. Because Brazil has such good skill sets in country, a lot of mining expertise. Right now, I think we're close to about 80 expats from different jurisdictions. And what is remarkable, given our track record of building in other countries, is we're bringing in, for example, Ecuadorians, Surinamese, Guyanese, to be our, call it, South American expat now on this project. So it's a small contingent, but people that we've worked with on other projects, they know how we work and how to get things done. So it's and they provide training and in context for the new people on the project.
Historically, when I look at projects that are delayed and have cost overruns and exceed budget, they're incorporating some degree of change of scope. Something is changing from the feasibility study, either in terms of the mineral processing, or the metallurgy, or the geotechnics, or there's some factor that changes the scope, which introduces delay. Have you seen any change of scope so far, and can you see, are there likely to be any changes of scope?
We're advanced quite a bit now, and one thing that always kind of can happen in projects is you obviously do geotechnical work to understand the foundations and the soils you're dealing with to build infrastructure on. So we've done a lot of the vegetation suppression, all the infrastructure we need to build on, and we haven't had surprises of having poor ground or difficult ground to work with. We've cleared the foundation for the tailings dam that we need to build. And so we're seeing what we're having to deal with. So no real surprises expected. And I'd say, we've thought the project out quite well. There's not a lot of, surprises where we said, oh, well, we should have built this into the project and we hadn't planned for it originally. So far, not very many surprises. And, given the context of permitting and, you don't want to be introducing changes to projects once you're in the construction phase. But, one thing I would say is, yes, we're seeing how we're optimizing things as we build, mostly to try and save money on terms of direct costs, but also schedule-wise. So that's really our objective in terms of changes, is to really build in some savings as we execute.
Thank you. I was expecting a but all the way along there. I was expecting to... I was waiting.
Well, for example, a but is, when you're building a project in the Amazon, I would say you need three things. You need chicken, you need rice, and you need rock. And the rock part is to get, all your roads rocked in and have the ability to get yourself out of the mud and the difficult ground conditions. And so we were delayed in getting our blasting permit, for example. So that created some delays for the mine to be efficient. But now we've since gotten our blasting permit and have been blasting rock, and we've seen our mining rate really crank up and do better. So, that's, for example, one hiccup that we had, but something that easily we work around in our schedule and planning.
That's interesting. You talk about the rock. A friend of mine, a geologist, took some time off and he travelled right into the kind of the heart of the Amazon and met some of the more primitive tribes. And one of the prized possessions, which was kind of carefully wrapped up and looked after, was a rock for sharpening the tools. I mean, it was because so hard to find in the Amazon. Let's look at the valuation of the company. Your market capitalization is above $500 million Canadian now. In your presentation, which is relatively recent on the web, I think you wrote it when the share price was a bit lower and you were just under $500 million. You kind of added 10% since the presentation went live. In there, you talk about the developer average trading at kind of 0.5 of NAV and the producer average trading at 0.8 of NAV. Do you still see yourself undervalued and kind of looking to close that gap, or kind of are you there or thereabouts given the kind of the recent rise in the share price?
Yeah, no, I think we still have lots of room to close that gap. And that gap exists because for developers, there's still risk in terms of executing and delivering on that value. But when I look at where the gold price is, call it, $2,000, I looked at our feasibility study NPV and we're easily in the range of $1 billion US. Definitely I see that as being the target that we have going forward in terms of valuation. Maybe putting a 0.8 factor to that. When I look at all the analyst estimates, consensus, price targets, generally around in excess of $2. So definitely I see us as having room to attain that value in the market.
Now these things don't always go in a straight line, and just having a look at the kind of the Lassonde curve, Crux analysts have kind of done a deep dive on this, and I've had a look at that report, and one of the things that I can see from that is that when a company when it gets financed and it goes into construction, it goes on a wonderful share price run, which is what you've done. But typically, as you get closer to the kind of the end point of commissioning, your balance sheet is kind of slightly you've spent the money on the plant, but we don't actually know that it works yet, and so quite often it kind of gives back that value over a 6 to 8 month period before it then goes on a run again. And I actually, one of the examples that was used in that analysis was Lundin Gold with Fruta. So even though it kind of went up, it actually comes back down almost to the same point, and then kind of goes on a wonderful tear when the operation really comes through. And I think that's the balance of kind of still got that execution challenge and that technical risk. What are you going to do if that comes? How are you going to protect your head mentally from kind of worrying about the share price?
Well, look, I think it's just continuing to deliver on our plan and making the progress that we've done. That's our objective. That's what we control. But I'd say, to your point, I think what everyone wants to see is there's two things. I think you said you were going to build for a certain price or a certain cost. You need to deliver on that. And, many companies have had financing shortfalls where they've had to raise additional money to complete their projects. So that's kind of pitfall number one that we're trying to, not fall into. And, some people, you have to deal with that at some point as you do. So that's one thing. And then once you do deliver and you get this thing running, everyone wants to see how it performs, if it performs as planned. So it's really demonstrating the ramp up, making sure that ramps up quickly according to schedule. And that's been our experience with other assets that the GMIN services team has built, and Fruta being one of them. It's really making sure that commissioning phase happens well and that you start generating cash flow quickly as planned. So that's our objective. And I think with our model of self-performing, our construction team is there to support the operations team and allow that ramp up to occur as planned. They're not buggering off with and handing the keys over to the operator, wishing them good luck. That doesn't really happen with our model. So that, I think, as you say, in the very early stages of startup, it's really the commissioning phase and proving that recoveries are there, that the throughputs are there. So that's going to be our prime objective come middle of next year.
And forgive my ignorance, but what's the metallurgy looking like? Are you going to have to deal with a lot of clay material, and is there any metallurgical or mineralogical complexity?
Yeah, I mean, we have very little saprolite on our deposit, so we typically are going to be processing rock straight from the get-go. The saprolite and what we call the artisanal minor tailings that still have good gold grades, we will trickle in to the feed in small quantities, and it's more for material handling issues than anything else. So yeah, we're very much close to rock. It comes up very close to surface, so we essentially are feeding hard rocks straight away into the plant. And with our pre-production mining plant, we'll have in excess of 2 million tons of ore in front of the plant before we start. So we'll have a lot of flexibility in terms of that ramp up there. The
next kind of question that's going to come up, I'm sure, as you go through commissioning is what next? What do you do next? And you say in your presentation that kind of M&A is a key feature, but I'm kind of I was also struck by the exploration slide in your presentation, and also I've got kind of the words of Freeport McMoran going around in my head and saying that they're actually focused on brownfields exploring. That where they see the best bang for the buck is exploring around the margins of their existing operations, because that's better deliver shareholder value than necessarily going out and looking for transformational copper deals, which is kind of quite a scarce landscape. But maybe the gold landscape is also quite scarce.
No, look, definitely there's the two fronts that are going to be important for us. As you say, exploration will become more of a focus for us as we, get out of the heavy construction phase. But definitely with the land package that we have that is quite extensive, with 996 square kilometers of exploration property. When you look at our land package, with the TZ deposit being kind of square in the middle, we have about 35 kilometers of strike length along that TZ trend, which is going to be, prime hunting ground for us to find additional deposits. So right now our budget is, I would say, more on the limited side until we reach commercial production and can generate our own cash flow to support exploration. But what we're doing now is really the groundwork in terms of soil geochem, geophysics, some drilling to better identify targets to really start major exploration activities down the road. But definitely, when we look at the region, we see a lot of upside.
Has that not worked?
To your point,
that work hasn't been done. You haven't inherited a kind of a pretty solid database.
So there was some work done in the past by Dorado, and I'd say they stopped drilling in 2015 and weren't really investing in the property going back many years. So there wasn't a ton of drilling on the property. And when we look at it, when we bought the property, there was 82,000 meters of drilling for that land package, 45 kilometers of which was to define the ore body. So just about 100 holes scattered around the property, looking for the next things, which is very limited given the size of this land package. So we're just kind of having to complement that work that was done in the past with additional soil geochem that was never done on many sections of the property. So it's really that groundwork that we're doing now that we feel will just help us spend more wisely, looking for additional deposits. And, I'd say the objective as any good miner is to at least replenish reserves once you start operating, but really to look for another deposit that can then sweeten the grade or provide for expansion opportunities and be very value adding to the business for sure.
It's been a really, really tough year a couple of years for junior mining. From where I'm sitting, it feels as if there are lots of unfunded or underfunded development companies which have got resources but are kind of slightly stuck in a dilution trap. The spending that's required to take it to the next stage, whether it's from pre-feasibility to feasibility or from feasibility to construction, those capital lumps are too great. So it feels as if there are lots of bargains out there. Does it feel like that to you? Are you do you feel as if you're in an opportunity-rich environment?
Yeah, I think there's quite a few opportunities, and we're doing lots of call it M&A activity in the sense that we're looking for other assets to acquire, because we don't want to be a single asset producer in the long term. So we're very much interested in buying additional assets that we can develop, or operating mines that have optimization opportunities. And to your point, there's several projects out there that are essentially underfunded, but also we're, in terms of high quality assets, I would say there's generally few. So it's looking at what you can do to make them better if it doesn't require additional exploration or better engineering to refine CapEx estimates. So we do feel there is opportunity, and we're looking at additional assets in Brazil, but also in South America in general, and that's in Canada as well. Those are generally the jurisdictions that fit our targets and where we want to try and operate and have the skill sets to do well. And so, we're quite active on that front.
What are your kind of personal favorites or kind of things which don't? Do you look at grade? Do you kind of say, anything less than 1.5 grams, it's not for you, or what particularly annoys you?
Look, there's several things. Definitely, you need a minimum scale, I think, to be efficient in terms of CapEx and in making a project viable. And so when I look at things, it's generally 100 is getting on the small side for how we operate and how we do things. So I'd say 150 is the nice sweet spot to 250 is the range where typically we're not competing.
These are thousands of ounces of production per annum.
Yeah, exactly. And so any larger than that, then we're competing with seniors and larger companies that have maybe more money to throw at buying things. So that is where we see a nice sweet spot for now, in terms of what we look for. But yes, I'd say we see many assets that have okay grade, but strip ratios that are very, very high. We're obviously looking at all those factors that will make a project viable, and anything that we want to get into, we want to have momentum with, in the sense that there is at least a starting resource, maybe some technical work on it that we can keep adding to and quickly get down a path where we can build. And obviously that has to be in jurisdictions where we feel permitting a project is not going to take 10 years. And in environments where communities want to have these projects built. So those are the factors that we look at when we're looking at M&A opportunities.
That's really interesting, because I've been sitting with Matt. We've been trying to kind of work out, which projects, which companies do we want to look at? What are the factors that really attract us? And the couple of the things that I talk about are scale and grade and momentum. can you actually advance a project? Are you stuck for some reason? And it's reassuring to me to hear that you're using exactly the same language.
And when we look back at why TZ or Tocantinzinho was attractive to us, is we saw all those ingredients in this project. So I don't actually expect to fall on another project that's fully permitted or that has very limited, permitting efforts to be done. I mean, we do expect that'll have to happen on the next project, but we want to make sure it's in a jurisdiction where we can that the timeline is more or less known to do the proper work and consultation and documentation that you can get there. So that's very much important for us. We know the mining world it's a long time to get things done, but we're also very impatient. We like to move fast, and we like to be building things and growing the business. So those are very important to us.
And hopefully in a year you'll the plan is within a year you'll have a different kind of balance sheet position, because you'll be accruing capital rather than investing it.
Absolutely. And we're happy with, call it our relative share performance in the market. I think we've been doing lots of meetings with potential investors. I think what they appreciate in our company is, yes, we have a great asset, but I think what they appreciate is our ability to do things and to advance quickly. And our, call it, in-house capability is quite unique. I think is very different from other developing stage companies. So I think that's attractive, and that'll give us the balance sheet and the paper to do the next deals.
Talking about the shareholder register, you've got quite a lot of strategics in there. You've got La Mancha up at 25%, and Franco-Nevada at just under 10%, and El Dorado 18%. Does that worry you, having those strategics there? I mean, I know you've got quite a good chunk of institutions as well, but what are the strategics? What do they tell you about their long-term goals for G mining?
I'd say these strategics we have, starting with La Mancha at 25%. I mean, the attraction for us was the fact that they want to be part of the story of building this company and growing the company over time. So for us, they're allies as much as investors in helping us grow this business. So we're very much happy to have them on board. I'd say a bit similar with Franco Nevada, where as part of our shareholder agreement, so long as they hold 5% equity interest, they have a right of first offer on any future royalties that we do on the next project. So given our aggressiveness to do other things, I mean, we do see them as allies to help us grow. And they're looking for royalties, but we're looking for financing. So definitely a nice fit for both companies. And when it comes to El Dorado, I mean, I think when they sold the asset, it was more for them to refocus on the assets that were in their portfolio that they wanted to focus on. And they're quite happy to, I mean, for the time being at least, to see us re-rate and do well with the Tocantinzinho asset. So we don't feel like they're looking to dump the stock. We also have a shareholder rights agreement where we can place those shares with other investors. So that can be done orally when the time comes as well. So, but yeah, so far we're happy to have their support as we keep advancing the Tocantinzinho project.
Just to wrap up, how are you going to disseminate news for the rest of the year? I mean, are you planning to do it in kind of quarterlies, or is it just going to be, what's your philosophy or the board plan on how you're going to tell the story for the rest of the year?
Yeah, I think generally what we're looking to do is provide kind of quarterly updates so that there's at least a meaningful progress to speak about in terms of press releases. With our corporate presentations, we try to update that at least monthly to show the monthly progress that we're doing, keep our investors informed of that progress on a fairly tight basis. When it comes to exploration, we'll see if there's like meaningful things to be disclosed as we move along. But like I said, a lot of it's baseline work that we're doing. I'd say there's certain things that we're doing that in terms of putting agreements in place, in terms of supply contracts that speak more to our operating cost structure that's going forward. So we'll likely be communicating some of that as well as we move forward. That give a little perspective in terms of power supply agreements and things of that nature.
Okay, so that would kind of be the almost like the kind of the numbers that would accompany the monthly photographic update in the corporate presentation. So if you get something which gives kind of granularity on numbers, you'd put that out.
Correct. Yeah, we do that obviously on a frequent basis in terms of our invested amounts or committed amounts on the project. And what we've done as well is we've done site visits with our analysts and certain investors. So we think that's also very useful to be bringing people to site for them to see with their own eyes how we're progressing. So that'll likely happen a few times as well during the construction process.
Louis-Pierre, thank you very much. It's been a pleasure talking to you and getting to know the project a bit more.
Nice speaking with you. Thanks a lot for having me.